Hello, friends, and what a brutal winter we're having across the GTA. Frigid temperatures, heavy snowfall, plus everyone recovering from the holidays and getting back into work and school routines after January 5th, technically giving us only like a 3-week period. As a result, real estate naturally started the year slowly, but these seasonal numbers actually reveal some serious opportunity for buyers. January recorded 3,082 home sales, which is down 19% from last January. Active listings climbed 8% to 17,975 homes on the market, giving us 5.8 months of inventory across all home types. That's solidly buyer-friendly territory where you get more choice, better negotiating power, and downward pressure on prices that really improves affordability. The average selling price landed at $973,289. That's down 6% year over year. And that's the headline number that you're going to be hearing. And here's the context. We haven't seen this average price since February of 2021, right before those artificially low interest rates sent everything spiking. So it feels like we've come full circle. And of course, you have to keep in mind that the condo market is also bringing down that average price point. As you might know, the Bank of Canada just held interest rates steady, so your mortgage costs stay completely predictable. This creates a perfect window right now. First-time buyers finally get real affordability after years of being priced out. Move-up buyers have way more inventory to choose from, and investors, especially they're circling these condos prices hard. Speaking of the condo market, we might know that sales dropped again this month, 26%, with average prices down nearly 10% to $604,759. And that's because about 20,000 new units will hit the market this year, well above our normal 15,000 annual average. And don't forget, we're coming off a record new construction inventory level that's come out into the marketplace. As a result, private investment firms have already started buying condos for their portfolios at these levels. You heard that right. The smaller investor-style units are pulling the averages down, but when you look ahead, we've only got under 1,000 units scheduled for 2029 completion. And long-term demand still absolutely crushes supply. Do you want proof of that demand? Well, a colleague in Brampton listed a home for $488,000. It was a detached home, fixer-upper. The owner had smoked in there all their life, and the interior needed a full gut renovation. They got 241 appointments in just 7 days, 63 offers on offer night, and it sold for $682,000. And Brampton semis that peaked at $1.2 million are now trading at about $800,000. So the floor feels pretty close. TREB sees a much busier second half of 2026 coming, and buyers should move now before the spring competition heats up. Also, speaking of spring, Toronto Home Show is March 6th to the 15th. Feel free to text, email, or call me for a pair of complimentary tickets. And of course, links for your area data is found below. And let's talk about your opportunity in this current market. And feel free to reach out if you would like a complimentary comparative market analysis for your home. Talk to you soon.